Hello guys, welcome to another trade recap and forecast. This one is on a Thursday. The reason is I wanted to wait for a bit of action in the markets. So we know that Monday and Tuesday this week was pretty slow. I mean, it's the end of the year, end of December. The New Year is coming and we had Christmas and then Boxing Day. So during those times, market is either closed or not moving anywhere. So this one is on a Thursday because yesterday we got some action and today we're getting some action as well. So should make the recap a bit more interesting. Here we have the euro and the US dollar and it's definitely moving. So let's see what happened. Last week we had this large push up. Was it the last week? No. Okay, so this was the last week, I believe, somewhere around here. This is when we did the recap, and yeah, we had a large push and then we just ranged around, but then we had an ascending structure and then we pushed up. So at this point we did get I would say a high probability pattern on the euro and the US dollar. Again, the price action here was not that clean. When I'm spotting a ascending channel, I want to see price only breaking the major highs. Here it was actually breaking the major lows and the major highs. Okay, so right here it broke the high, broke the low, broke the high, broke the low. So not the cleanest channel. Then we did push up, but we left a wick, broke, left a large wick. Yeah, very large wick on the top. A flag formation entry pattern did form. Here is the flag and this is the entry. Okay, so we have the first high, first low, second high, second low, and the blue candle is the entry candle. But for me personally, with this wick, I want to see a bit more of a range inside of the flag. Okay, so with the wick I'm being more careful. Again, price action not the cleanest, and then we get a wick and then we get no range. So first warning sign, not the cleanest ascending channel. Second warning sign, large wick. Third warning sign, not much of a range inside of the flag, so I was not willing to risk it. And I did stay out of this setup. How would it play out? Well, it would be currently running some profit, I believe. I may have been stopped out here, depending on how much did this break by. 0.5 pips. And my stop loss would be moved to 2 pips below this level. So I think I would still be in this particular trade. Currently, if anyone is in from here, it would be running some nice profit. So what am I looking for? Well, today or tomorrow, we may get another push up like this. And then I would be looking to buy. Because then I would also see like a push up, a little bit of a break of structure, and then a continuation, which is a good sign that the price is trending up. And it's not unusual to get some trends right at the end of December. In my backtesting, I did get some large impulses, some large trends just before the New Year's. Okay, just in the last week, in the last 3 or 4 days, we did get some nice trends, and there were some nice winning trades in the last 10 years of data. When you look at the last 10 years of data, you can spot some nice trends at the end of December. Moving on, again, currently I want to see a large push up. EJ, very flat, very range bound. We had a large impulse up and now we are just ranging inside of the impulse. So this is not unusual, and what I'm looking for is a large push up or a large push down right here. Okay, that is what I'm looking for. Large push up or a large push down. And I'm expecting more range bound price action, to be honest. I'm expecting more of this to happen. Currently, definitely not on my watch list. Do I expect a setup today or tomorrow? No. I mean, this needs to break out with a very strong force up or down for me to be interested in setups. So currently I'm leaving this pair alone. Then we have the Aussie and the US dollar. This pair is not looking that bad. So we did get a very clean ascending. Let's see. Here was the last recap, I believe. Then we started to very cleanly ascend. So we started to ascend in a very clean fashion. What do I mean? Well, consecutive breaks of the high. Remember what I talked about? I want to see this, which is exactly what we saw right here. So first break, second break, third one, fourth one, fifth one, sixth one, and then the seventh break right here. So 7 consecutive breaks of the high, which is a definite sign that the price will very likely reverse to the downside. Now we did not get any clean reversal entries. We broke the low here, retraced, broke the high, impulsed, then we reversed. Now we're getting some momentum. So if this continues, I'm not looking for a straight reversal trade like this. Why? Well, because this part of price action is not that clean, so I would not risk it. I would not risk it because I saw a bit of structure breaking here, right? So we had broke the low, retraced, broke the high with momentum, and then created sort of a V reversal here. So yeah, kind of opposite signs, okay? So it's kind of telling me that it wants to range around more than it wants to drop with this current price action. So I do not want to take an entry straight from right here. Okay, so opposing signs, you could say. What I'm looking for, what I do want to see is a large push down. I want to see this impulse continue down. Okay, so I want to see it push like this and then look for a flag or look for a break and the retest, then look for entries. So I want to see more momentum coming down. Then I would take into account this large and clean ascending, and I would be looking for an entry. So this pair is definitely on the watch list. Aussie US dollar is definitely on the watch list, and I am looking to see if this impulse continues down a bit more, then I will be looking to sell. Here I'm seeing a bit of a warning sign, a bit of indecisive price action. Okay, moving on, Aussie Japanese Yen. So this one is looking, well, it's looking kind of okay. Was I looking for a trade right here for a reversal setup? So something like this. Was I looking for something like this? No, I was not, because price just tapped out of this area. So just barely tapped the upper liquidity zone and started dropping to the downside. So a straight reversal was not for me, but I did look for sells in this trend down. Okay, I did look for sells, but nothing really fit my plan. I saw no high probability entry anywhere here. This impulse is looking nice. I am seeing some strong momentum, especially these 3 candles. They're looking really, really good. So I am looking to get in, or either on a flag or on a break and retest entry. So this pair is definitely on the watch list, and I am looking to sell because of this push. And it's definitely trending down. I mean, it's not the cleanest downtrend. We have this break of structure as well, but do you see any buying pressure here? Okay, here we have buying pressure, but just 1 candle, and then we start dropping again. So selling, 1 candle of buying, then we continue with the strong selling to the downside. So my bias is still down, and I am looking to get in on a high probability entry pattern. Pound US dollar. So for this one, this impulse had some potential. Okay, so this impulse definitely had some potential, but what happened? I got no entry here, so no high probability entry formed. And then we did break the high, but not enough momentum for me, and especially because we kind of ranged around here. So at this point, I was not really interested to take a buy setup. Why? Well, price action, this is looking very, very corrective, range bound. So the only thing that's really going for this trade, going to for buying right here, is this push. That's the only good sign about this price action. This is looking very, very corrective, very, very range bound and just stuck in a range from this large push. Usually when you get a large impulse up, price ranges around inside of it, and then it's kind of a no man's land. So yeah, the only good thing was this push, but then we kind of ranged around here, ranged for too long. I usually like to see 1, 2, maybe 3 candles in the pullback, and then for the high to break with momentum like this. I want to see this. This is a very good sign, but we kind of ranged around 1, 2, 3, 4, 5, 6, 7, 8 hours of flat price action, and then we pushed up. So these sort of formations are not the best according to my backtesting experience and live trading experience, to be honest. So not interested. And then we broke the high, retraced, broke the low, retraced. So yeah, this is just doing nothing, okay? This is just being very flat right here, and it's starting to slow down. So I did say this was the only good thing, and now this whole momentum has slowed down, started to ascend, and even started to range around. So the pound is not on the watch list. This sort of price action does not interest me. Look at how the candles are really small, so really small candles everywhere in this price. Wick, retrace, large wick, retrace. So what I'm expecting is just for the price to be flat in this price action. Okay, I'm expecting something like this to happen. So the pound is not on the watch list. Okay, so let's move on to the final one, which is New Zealand and the Japanese yen. And this one is running some very, very nice profit right now. I am in a trade, currently running at around 8.56%. Okay, but first, before we get into this trade, let's see what was happening. So I did take a long trade here. It was a loss. If you want to see it, check out my last recap or the one before that. Actually, the last one. The last one has this trade and explaining exactly why I took this trade. And then what happened? Well, we basically started to ascend in a very, very... Let me see this one as well. Okay, there was another opportunity right here. At this current point, price was definitely showing me a established downtrend. So this was looking very, very clean. This price action was looking very, very high probability to continue trending down. Also, look at the candle formations. This one, clean close, large candle, clean close, large candle, almost to clean close, large candle, clean close, meaning no wick on the bottom. This one, large candle, little wick, large candle, clean close. So we did see a bit of buying pressure, but with the overall structure of these candles, this was definitely a high probability downtrend, okay? But then what happened? Well, we started to slow down a bit. Blue candle, small red one. So what I wanted to see potentially is price struggling to reach this break and retest level, okay? So this is where my order would be on. This is the level I was looking at, but I saw a bit of momentum building up. See this one as well. So at this point, with the slowdown on the bottom and with the momentum building, I did not want to risk the 1% on this trade. I wanted to see it come down more in a slow fashion like this, okay? So yeah, because of the momentum shift, I was no longer interested. Actually, that was not the only reason. So the first reason actually was pair price action. We did have this very clean downtrend, but if you look at this whole structure, for me, it's not the cleanest. We had a push up and then this very, very flat range. I do not classify this as being a nice clean ascending channel. I see this as being a flat range, okay? So pair price action, not the best. Yeah, we had a very clean downtrend. That was a plus. But then we had a slowdown at the end. So small candles on the bottom. And then we had a momentum shift up. If this momentum shift did not exist, I would take this break and retest trade. Okay, but when I weighed everything up, I wasn't willing to risk the 1% on this trade. And it would be a winner. So this would be a winning trade. a small winning trade. So you would get tagged in here. I know Nico, my colleague, took it, and he did bank a little bit of percentage. You would move your stops 2 pips above this level, and you would make like 0.3, 0.4% winner. So it did end up being a winning trade for everyone that took it. Then what happened? Well, we had some very, very clean price action. This is kind of the cleanest price action that you will see in the markets. Very clean ascending channel. Look at this. So consecutive breaks of the high. Very, very important. No break of the low anywhere in the structure. 1, 2, 3, 4, 5, 6, 7. So 7 consecutive breaks of the high. Now, most of the time, like 70 or 80% of the time, this will reverse. Maybe even 90% of the time. This sort of price action is extremely high probability to reverse and start a downtrend like this if it's an ascending channel. So this looked extremely clean, and then the final high probability move was this right here. Major bearish selling pressure, major bearish candle, nice clean close on the bottom, and this setup was just it was perfect. It was a 10 out of 10 setup, I would say. Only thing which may be a little bit of a warning sign is overall price was kind of range bound. But when you zoom in, with these extremely clean ascending and descending channels, it is willing to risk the 1%, especially when you get this sort of selling pressure after the channel. So even if this was stuck in very, very sideways price action, I would still risk it because this ascending channel was extremely clean. Why was it clean? Well, because we had consecutive breaks of the high and no break of the low, right? You would see a dotted line if any of the lows were broken. So they were not. First low that was broken was right here. Placed my order 1 pip below this level for the spreads to get tagged in. 13 pip stop loss. First pullback candle. I do have a rule, if it's a 2 candle break, I move it 2 pips below my level and I put a 12 pip stop loss. But this candle tagged me in so quick that I really forgot to adjust it, and I did not have the time to put in a 12 pip stop loss and move it 2 pips below my level. So yeah, this candle just almost immediately after opening, so almost immediately after the candle opened, it tagged me in, and then I was in the trade. And then it dropped. Okay, so currently running some very, very nice percentage. 8.65%. Again, that is running. I only have locked in 2 pips above this level, so I'm only locked in 1.2% winner on this particular setup. So that's what I have locked in, and I'm waiting for a counter trend move like this to move my stops. But again, Japanese pairs are known for doing this, so I still may get taken out to right here at this level, because the Japanese pairs, you never know with them, and they can just take you out. They can have a large move down or up and then completely reverse on you and basically screw you over. But that is what happens in the markets. That is the risk that you take. There was a scaling opportunity, so an opportunity to take another setup right here. It's kind of a free bar flag or flag plus, however you want to call it. Many names, but basically what it is you get an impulse. You get an inside bar, so a bar that the high is lower than this high, low is higher than this low, so it's inside of the prior candle. Then you get an outside candle. High is higher than this high, low is lower than this low, so it's outside. It kind of eats up this candle, and then you get an entry candle, which is a red candle, so this would be the entry candle. So these types of formations are very, very high probability, but there was a major warning sign for me personally. We had these huge wicks on the bottom. Okay, so just major rejection of this level. Huge wick, big wick, large wick, large wick. So 4 large wicks. And because of that, I did not want to risk the 1%. This was just not looking like it wants to continue down. It was looking like it's gonna reject. If you took this, unfortunately, it would be a loss, okay? But if you were already in this trade, then it would continue down and you would still be in the first trade. If you got scared right here and closed the position after the momentum shift, I mean, I was looking at it during the night and it was looking like it was gonna completely reverse on us like this, take us out. Fortunately, this time it did not. It just tapped this level and dropped. That is the reason why we use a mechanical trailing stop loss approach and not a discretionary one, because if you used a discretionary one, most likely you would close it after seeing this shift in momentum. Okay, large push down, very, very large push down, and I'm looking to sell. I'm looking to get in on a flag or looking to get in on a nice break and a retest of this level. That is what I'm focusing on. Definitely looking to scale into my position. And this impulse looks really, really large and really, really clean. So large push, large candle, clean close, small candles, but large candle, nice close. So just a small wick, large candle currently forming a clean close on the bottom. So yeah, looking for this and a scale in. That is about it for NJ. Let's recap. So which pairs are on the watch list? EU is not. EJ definitely not. Aussie US dollar it is. I want to see it drop more, then I'll be looking to sell. AJ it is. I'm looking for an entry right here. Pound US dollar, no, not on the watch list. Starting to range on the top right here. NJ, I am looking to scale in and to sell more. Looking for an entry position or an entry pattern right here. So yeah, that's about it. This is the last trade recap and forecast in the year of 2023. So have a great 2024. Good luck with your trading. And that's about it for this trade recap. Let's see what this trade will bring us. Again, today and tomorrow we may get more trends. So be alert, search for setups if you're trading. I know some people take this period off, but I have spotted some very nice, very strong trends and impulse moves at the end of December. So good luck in 2024. Have a great new year and see you guys in the next video.